Next session is a panel discussion on the changing role of CFOs in the age of digital transformation, how technology is driving innovation and transformation in finance. Please join me in welcoming the moderator, Ms. Hemalatha Saptarshi, Head Enterprise Sales at Iris GST. Can we have a big round of applause for the moderator? Ms. Hemlatha has a rich experience of 22 plus years in the industry, starting with Piramal Enterprise in the cost accounts section and later in project management. She shifted to Leela Scottish Lace, handling fabric accounts. In 2011, Hemlatha joined Iris Business Services in the sales department. She was initially responsible for the XBRL conversion service for reporting to MCA. With her keen business sense and dedication, she was promoted to the head of sales for domestic market, responsible for range of software developed by Iris pertaining to GST compliance, e-invoice, e-way bills including MCA, etc.
So good afternoon, everyone. So a very warm welcome to all of you. And so traditionally, you all know that the CFO, the Chief Financial Officer, role has been as a finance professional, right? Looking into balance sheets, P&L, annual reports, so on and so forth. The 21st century CFOs, I would call as the modern CFOs, have a larger role to play and a huge responsibility on their shoulders. Are you all with me? Yeah. So we have, I would actually, categorize them into 3 V's. That is protect value, create value, and unlock value. Protect value is, of course, you cannot get away with the controllership, the compliance, governance, etc. Create value by looking into diversification, strategic alliances. We've been talking about all these things since morning. And unlock value by maybe look into IPO, mergers, acquisitions, raising capital, so on and so forth. So we have with us eminent CFOs from the industry. They will be sharing their knowledge and wide experiences with us. And one of them is not here. Mr. Pranab is not here. We have a hard stop, but 1:45 we have to finish. So we'll be quickly going into the questions and answer sessions. So of late, if you see the CFOs, whenever we see, I have been meeting multiple CFOs, the general topic in the conferences and in the meetings, if anybody can guess what it would be? General, topics generally have been discussed. What is it? Sorry? Automation, exactly, there you are. Automation, technology, digitization, digital transformation, so on and so forth, right? So that's how the topic for today. This we've been discussing so many times. And of course, there are a lot of things that needs to be learned from our CFO panelists today. One of the things that the CFOs have been doing, they have been adopting is the cloud technology, AI, ML, RPA, etc. So I am from Iris Business Services. We have a tool called LMS, that's a litigation management system. So when I meet the CFOs or the indirect taxation head, the requirement is there should be minimum manual intervention. So how do we do that? So the system should be able to read the notices, auto-populate it, right? So we developed that. So using RPA, what we have done is we have the PDF is read, it's filled in the LMS, and then including the summary, the system reads the whole notice, creates summary, and then which is editable, and then it can be saved into the system. So it reduces the manual intervention or the manual efforts into reading all these things, and almost 90% of the manual efforts is reduced. So I would not say that any product company will say the product is mature. It keeps on, the requirement keeps on, it's a lengthy list that is a never-ending list actually. So we'll go to the question. Now my first question is to Mr. Veeral. So what are some key technologies that CFOs are adopting to drive efficiency and effectiveness in finance function?
Sure. Thank you, Hemalatha. So basically, we started our digitization journey 4 years back. And I would like to give the example how we started the entire journey and how we planned that journey. So there are few impact areas which we identified. So I'm coming from the FMCG, particularly into the food sector, where the products which has a particular shelf life, and after that shelf life is over, we might see the expiry, and that may hinder us in terms of the profitability. So the big impact area which we have identified in the organization, those are the availability. Availability of our products, because we are right now dealing with, let's say, 200 number of SKUs, having 10 different warehouses, and we are working with 6 different channels, and having more than 1 lakh number of retail outlets, right? So availability of our product, which is perishable in nature. Second is the freshness, because consumer right now, they are not liking to have any kind of uh, uh, low shelf life products where the remaining shelf life is very low, and they may not able to, consume that particular product. Third is about the offtake. So offtake is wherever we are doing a marketing campaign, how much volume uptick which we are getting. So these are the 3 major impact areas, and based on that, we identified what all digital tools which we can use to improvise the efficiency. So some of the digital tools which we have right now used, those are the Power BI, where we are doing the primary as well as the secondary sales, capture the primary as well as the secondary sales. Second one, that is more about the partner portal, so that all our distributors, they have a seamless connectivity. So Mr. Singhania from the other panel, he has given one example about a distributor is let's say, choosing or giving a preference to work with a FMCG company rather than the B1. And that is more about the seamless technologies, how they are doing the claim management, NDC, so on and so forth. And for that, we have implemented the what we can say, the partner portal. Third is the vendor management. So vendor onboarding supposed to be seamless, and then it supposed to be faster. So vendor management softwares are some of the technologies. Apart from that, dynamic PO approval processes, so that the approvals are seamless, and it should not go into, let's say, 20 different email for the approvals. And the third one, that is the GL-based reconciliation for all the compliances. So these are some of the technologies we have implemented during our digitized journey.
Yeah, thank you very much. I can relate to all what we've been discussing with the CFOs. Yeah, so absolutely. I mean, thanks you for all the insights that you've given. So when we adopt technology, what is the other thing that we require? So we need accurate data and faster data at our fingertips. So we have actually, Iris has tied up with Rubyscape, and we have made a CFO dashboard where we give the real-time data for analysis, and the CFO actually is responsible. He's a business strategic partner with the CEO, has to answer multiple questions to the board, right? So these things are a first requirement when they say they want to adopt technology. So my next question goes to Mr. Anuj Jain. So how does digital transformation impact financial reporting, analysis, and decision-making process within organizations?
Sure. Thank you, Hemalatha. So I think it's a very pertinent question, right? And some of the presentation which we have seen since morning has been kind of talking about most of those elements as such, right? So if you talk about the new age systems, right, what you achieve, we heard about higher level of accuracy, right? So we kind of, the idea with high level of accuracy is to do away with the manual interventions, right? So that enables you to kind of put more trust on data and make and kind of make effective decisions. So that's the one element. Second is obviously the real-time reporting. I think we are living in a world where we have to kind of really be on top of data. We have to make sure that we are having the right set of insight from data to take the right level of decisions. So enabling that in the financial reporting phase is very important, right? So in previous world, if in case you don't have the right set of digital tools in place, you would ask for a report and everyone will be kind of producing a different dashboard and people will be kind of looking at their own ways of looking at those reports. Now, I think what we have changed is instead of you creating a dashboard for individual, the individual can create a dashboard for himself or herself as to what they require, right? Which data enables them to take the right level of decision. So Dayesh has kind of really transformed and enhanced the role of CFOs to being a data churners, to kind of being a thought partners in terms of what does it mean and what's the corrective action which are required in the market space with whatever we are seeing from a data point of view. Sorry? Yeah. So I think potentially I'm getting a signal I need to kind of wind up. So,
I'm not, I just thought you finished.
so I think there are other elements which are equally important while we look at this. One is from the risk and compliance and the governance point of view. I think so. As I said, with the removal of the manual intervention, it's much more easier to have the audit trails, to have the higher level of governance and higher level of compliance, which is one of the most trickier issues for all the CFOs, right? The hygiene factor, how do we maintain that hygiene? So, and last piece from my side, I can continue talking about it, is overall holistic kind of end-to-end integration with across different systems in the organization, right? So, how do you kind of have one truth of data, right? Instead of finance saying something and the sales saying something, how do we make sure that we have one source of truth and we are all talking from the same lens and same data, so we don't do this reconciliation which some of our colleagues have been talking since morning, that we have to 500 reconciliation, 5,000 reconciliation. How do kind of make sure that we require less and less of that, which means how do we kind of change the process in itself to say, okay, what can we simplify, what can we do away with, and whatever is remaining, how we kind of transform that. Thank you.
Yeah, absolutely. Thanks, Mr. Anuj. So it's right. So having an interactive dashboard where, it's available. The user can just change it and then the data should be available as required, as per the reporting that needs to be done. So while we do this, like when he spoke about integration, it's integrating your ERP system to another system where the data can be massaged and there can be the insights that can be generated and developed. So while we do that, of course, there is also going to be a risk element, right? So everything is not, wherever there is something, there's a positive, there's also some negative. Definitely, I mean, you have to look at which has got more positives or more advantages and minimum disadvantages or minimum negatives. So here, when we talk about the risk, like, I would like to ask Mr. Dayesh, how does digital transformation enable CFO to enhance risk management and regulatory compliance efforts?
Thanks, Hemalatha. I think it's a very, very pertinent question in today's times, right? I think all of us very clearly know the role of CFOs have changed. I don't have to elaborate further, and it has been already discussed in some of the sessions in the morning. But one key agenda for any CFO is obviously to ensure that the performance of the organization is at the highest level, and at the same time managing the uncertainties that are surrounding the business today. I think as we've increasingly gone global, almost all of our organizations are global in nature in some form or the other today. The complexities around us have changed a lot, right? I mean, in fact, they've only increased. And therefore, the risks that have kept on emerging are of very, very different kinds, different complexities, some of which you can always plan for, some of which you cannot really plan for. For example, let's say the cybersecurity risk is not something we can really plan much ahead. Data privacy risks have come up. Technological risks have, disruptions have become a risk for almost every kind of organization, not just for a tech sector, but also let's say for a manufacturing sector. Geopolitical risks have begun impacting. So for a CFO, I think it's very, very crucial that he is able to make that impact or make the organization understand the impact of this risk. But at the same time, also try to explore if some of these risks can be converted to opportunities. But given the complexities, would he be able to do it without a digitalized world? I think the answer is no. Today, fortunately, the digital technologies are enabling the CFO and the finance function to, let's say, first do an assessment of the risk, identify a risk by using tools that allow the CFO to do a scanning of the environment, figure out what are the emerging risks, what kind of actions the organization will be required to take. Secondly, try to put in place the action plan and in a centralized database for each of the actions. and therefore track those actions very, very clearly. If this were in a pre-digitization era, I think it would have been very difficult to keep this data together because it would all have been at disparate places, different people having different ownership, but not a single owner. But today, the digitization allows the CFO to have them all at one place. And last but not least, keep a very updated dashboard which a CFO or the CXOs or the organization or the stakeholders can use to see the impact of this data at a real-time level, to see how these are really panning out, to see how the mitigation plans have effectively converted themselves into something more real, and at the same time have these got converted into opportunities. So the dashboarding tools give a very, very effective insights to the CFOs and the organizations today to see how this can be managed. Coming to the second part, I think is also true about compliances, because compliances today are not just industry specific, they're becoming country specific, they're becoming region specific, and given the technological changes again, the regulators are finding it very difficult to keep in pace with the changes that are happening, right? So therefore, how do you ensure that all the compliances are met? Now, not meeting compliances voluntarily or involuntarily have their own impact. You just don't, not just get into a financial liabilities in terms of penalties, etc., but a reputation risk or the damage to your reputation can create a huge risk for the organization in terms of how investors look at you, how your stakeholders look at you. And therefore, looking at compliances in a digital format also is equally important, which helps you track the compliances at one shot, because again, as I said, disparate compliances, if you're not able to track them at a single person, at a single level, even one compliance not being met can have significant impact. And therefore, the digitization completely helps the CFO to ensure that risks are and compliance are completely managed. That's probably my point of view, Hemalatha. Back to you.
Yeah, thank you. Thanks for those wonderful thoughts, So definitely, like when you talk of risk management, you have to think, you have to definitely do the due diligence, and not taking a risk is also a risk, right? So definitely have to take the risk. So in this world of AI, data, analytics and artificial intelligence, when you talk about it, of course, one given is you need to get the real-time data, real-time reports, insights at a faster pace. It has to be at your fingertips for whatever data is there. So this data which is there is always, data is the new gold, right? I hope you all agree with me. So what do you do with this data? Data that has to be analyzed in a proper manner, that can also be used for forecasting and predictive actually in nature. So how do we, my next question goes to Mr. Neeraj. So what role does data analytics and artificial intelligence play in transforming financial planning and forecasting?
Sure. I think with the growth of data that we are seeing in the last couple of years, I think all of us in this room are using analytics day in, day out. I don't see that as something new. But from our context, from Icertis context, which is a contract lifecycle management solution, we get a chance to work with CFOs on both the buy side and the sell side. So any procurement contract that you create, it's created in Icertis, for example, whether you are running airports, you're building bridges, you're making chemicals, or you're making soaps. Any buy side contract is created in Icertis. For a CFO, what is most crucial is he gets to see what risks are being involved in this procurement. Sometimes we have customers who are linking buy side and sell side. So if I'm building a new bridge, which is a 1,000 crore project, so I'm signing up with the government to build a 1,000 crore project, but half of my work is done by subcontractors. So all the risks that I accept while I sign a contract with the government on getting the 1,000 crore project, how am I passing those risks back to a vendor when I'm buying subcontracting services, whether it's material or service? How do I link these two? What risks are involved? How does data look like when the project gets into execution? Any dollar comes into, or any rupee comes into a company or goes out of a company because there is a contract in place. So we track these contracts, and CFOs typically use the dashboards that our solution provides to essentially understand, number one, what are the contractual risks that I'm carrying? Number two, is the legal language in the contract as per the regulations of the country, so I don't have risks related to that? Number three, where am I running overboard? So most of us know that 1,000 crore project, you land up spending 1,200 crores. So where did that 200 crore go? Who approved it? What were the deviations? Was I entitled for any penalties, or was I supposed to apply any penalties? So obligations is what we call it. So the ability to use artificial intelligence to read a 1,000-page contract and say that, okay, here are 25 obligations that you should actually watch out for, or here are clauses that you should change, or here is a penalty that you are going to incur, so please change the language. So whether you are buy side, you are doing a vendor contract, or sell side, you are doing a sales contract, both sides it becomes very relevant. Last but not the least, every industry has its nuances. So if I am telecom, I have a different requirement for writing contracts and signing contracts. If I'm automotive, very different. If I'm consumer products, very different. So each industry has its nuances, and what we believe that most of the CFOs want to look at risk and analytics in a certain fashion depending on the industry that they belong. So we do a lot of industry specific enhancements. A lot of our partners also do that, and that's something that we see quite regularly.
Yeah, thank you, Mr. Neeraj. So, whenever any new technology has to be introduced in the organization, is it the CTO or the CFO who's generally involved in this? Study actually says that anybody would like to take a try? Study basically says 40% of the CFOs are actually involved in taking the technology transformation for an organization forward. Of course, with any due respect to all the CTOs, CTOs are also responsible, but the one who leads this technology implementation is the CFOs. So that's what you all are. I know possibly most of you sitting here would have already started implementing technology or digitization in your organization. So the next question goes to Mr. Anuj Jain. So while you're implementing technology, you have to also have multiple challenges that you are facing. The talent, the inside, your internal team members you have to get on board. They have to agree to it, otherwise the project will not be a success. So similarly, supply disruptions and multiple other challenges. So Mr. Anuj, so what are the challenges CFOs face in integrating new technologies into existing financial system and processes?
So, thank you for that question. I think it's a very important question because we all talk about technologies, and if you look at the technologies world, right, it's ever changing, right? So, and what does that mean? Sometimes, some of the organization, we kind of put patches on our existing technological network, which is potentially the recipe for disaster, right? So I think if you look at the biggest challenges which are there in this world from the technological adoption is the fact that you're working on the old technologically expired landscape, and if you try to kind of integrate that with a new age technology, whether it's a cloud platform or something, it just becomes super difficult, right? So how do you kind of take that decision? Okay, how do you look at it from the overall technological strategy and the IT landscape and the data landscape? I think that's holistic view is required instead of kind of taking a more piecemeal view of saying, okay, we need this, we need to kind of fix this, right? So that's one element. Second, as you said, right, we have been talking about integrated data. I think this entire element of data silos, finance, sales, operations, having their own silos, how do we kind of bridge that? How to kind of make sure that we have the data management framework in place? We are kind of talking about data lakes so that those dashboards, which are kind of the front end, are kind of producing the consistent results and enabling you the right insights. Third element, Hemalatha, which you touched upon in terms of change management, right? So obviously we all love doing what we do, right? And we would not like to change unless being forced to change in most cases. And that's true. Even with the new technologies, means we are going through a new implementation of a new SAP. And when we go and talk to the stakeholders saying, yeah, this is how we should do this process, say, okay, this is how we do this process, we should replicate it in the same form. I say, sorry, that's not the efficient use of technology. Because when we are moving this system, when we are making this technological shift, I think it's very pertinent for us to kind of take a pause and see, okay, is this process required? Can we make it better? how we kind of simplify it instead of just saying, okay, we just move this process the way it is in the new system, because that's not really. So how do you kind of do the entire change management across stakeholders, whether it's employees, whether it's partners, whether it's business or the vendors? I think it's equally critical. And the last piece, I think, which is each of us as a CFOs are like very frugal, right? So, and when we have this technological investment, we say, okay, yeah, this is like a sunk cost, which is there in my P&L. And so in case I change it, I need to take a hit on a P&L, which is very difficult decision to take. But I think it's like, if I put it in a way, means if that system is not working, it's better we shift it away from that system sooner than later, because what you are doing is you're kind of putting your good money over the bad money, right? So it's better that we take a step back, redefine our strategy, overall strategy. Because one thing for sure, just to kind of conclude it, I think we are living in a world where we have to kind of adopt new technologies. We need to kind of take a strategic decision what that technology bring to us, because that would be equally important for you to kind of stay competitive in the market.
Yeah,
So
absolutely. Thank you for those great insights. So definitely, whatever we are going to do, it's going to come with a cost. So we need to take a proper assessment of everything and then take whatever is actually required for the organization, right? So the CFOs basically are the most important part of the CXO. So they need to have the data, they need to, in the boardroom, they need to explain. They actually have to be a strategic partner to the CEOs, understand the vision of the CEO, and then how do we go there? How do we reach that vision? Is also a plan, strategic plan that has to be made by the CFOs. So next question to Mr. Dayal. In what ways does digital transformation empower CFOs to provide strategic insights and support business growth initiatives? Mr. Dayal.
I think there's now increasing trend towards, looking for insights, right? People are looking for forward-looking insights, not really looking at analysis, quote unquote, saying what happened previous quarter, how does this quarter compare to previous quarter. I think they're more interested in knowing how the future will trend. And therefore, there's increasing focus coming on insights, providing insights and predictive analytics. They actually want to know where we will land, right? Not really looking at what happened in the previous quarter, but if I'm looking at a quarterly performance, what do you think I will really be looking from a standpoint of revenue or my cost at the end of the quarter? Now, if I were to give this insight, this could be a very broad level insight. But if I have multiple pieces of business, each business would like to know its own insights. And therefore, finance is now playing a very, very important role in giving these insights to the business. The business teams are looking to the CFO and his or her teams to provide these insights to them. So, for example, they would like to understand the mix of their business. How this mix of the business is going to change, right? Maybe if you are, let's say, if I'm in the tech sector and I have 3 or 4 different business lines, how will the revenue really trend from each of the business lines? So, for example, let's say I have a certain order book, right? How will this order book convert to revenue in this quarter? That's a very key insight that they look at. Do we see any kind of risk to a particular number that we are committing? If yes, what is that risk? Now, this can be done only by using more and more of analytics embedded in your system. Then they're looking for like a weekly dashboard, if not a daily dashboard, of what has actually happened in the previous 1 week. And therefore, what does it mean for me? So if my quarter is ending, say, 31st December, and I'm today on 5th of December, what does this really portend for me? Where do you think are the gaps? So if I'm able to give them that analysis or analytics about the gaps and what the business needs to do, I think that's what they're really looking for. Similarly, if I'm looking at a cost, they really want to get into details of the cost. Where are the areas for optimization of this cost? And therefore, do I provide them with dashboards which can give them an analysis? Yes, where they can actually do more of a self-service. Today, what we have done, let's say in my own organization, is we've created those business-specific dashboards. So I can go into my business's dashboard and look at the parameters. What we have also tried to integrate is the non-financial metrics with the financial metrics, which means even if I were to convert those non-financial metrics to financial metrics, what could be the implication for me? Now, if I'm able to give these insights to them, I think they are able to make much more agile decision making or much more faster decision making. That means if they have to go to a customer and say, I want to work on this particular line of business with you, what will it mean? But they can do it today only if we are able to give those insights to them. Therefore, it's becoming increasingly important for the business teams to start relying more on finance teams, not just looking at analysis of the past, but what we can give them as forward-looking analytics. I think that's a very critical shift that is happening over the last few years.
Yeah, absolutely. So the other panelists, if you would like to, just 30 seconds each, if you would like to take, to just give a few points, if you can. Yeah. Starting with you.
Yeah. So one of the point that was about forecasting. So as it says, trend is our friend. And Mr. Neeraj, he has given the example of buy side risk. So there is a sell side risk which is also there, particularly let's say in the retail industries, where all our revenue which is recognized on the primary side, but whatever inventory forecast or the SCM forecast that is done on the secondary, that is from the distributor to the retailers, right? So digitization which is required to let's say invert those kind of risks.
Yeah, I think, as I said, in the world of commerce, both buy side and sell side risks have to be mitigated. Using some of the tools that are available today, it becomes a little easier to, as he rightly said, forecast and come up with what if analysis, come up with what will happen if things change. I think we are currently seeing a lot of wars, we are seeing a lot of change in supply chains that are happening. All this results in the requirement to quickly do what we call searchability. The ability to search out of 1,000 contracts, which 10 contracts will get hit because there's a war in Russia. What do I need to change as clauses? So can artificial intelligence help me do something like that? So there's a lot that technology helps in. And again, it depends on the industry, as I said. Every industry has its unique requirements in this field. But commitments and entitlements, I think tracking both become very, very crucial. And in the context of risk, it becomes even more important. Yeah.
Yeah, I think I can't agree more with the fellow panelist here. So definitely the role of CFOs is evolving. I would not say changing, I think it's evolving. They are more and more becoming a strategic partner to the business to enable the right decisions, to drive the kind of take the ownership of taking business forward, right? And given the book of word, I think the agility in terms of processes, in terms of way of working, and the skill set which you require, not only at CFO, but the entire team, right? That is going through a transformational change. We are not looking for any more people to just kind of know the accounting standards and do the accounting, but people to kind of really see what does that mean and enable that information. So yeah, I think this entire fraternity, there is some exciting times ahead for each one of us. Thank you.
Yeah, absolutely. You would like to add a few things?
Yeah, maybe last closing comments from my side. I think just summing up from all the key messages from our colleagues. I think a CFO is now a 360 degrees resource for the organization because he or she now touches every part of the business. He or she has the ability to influence every part of business. And his job is now very clearly to make it a very high performance organization. I think the CEO very clearly looks forward to the CFO to drive the business for him because CEO believes that he has his own agenda, but that agenda can be successful only if the CFO is able to support him. So I think that's the kind of importance that the role is now really taken shape. And as Anuj just mentioned, it's going to be ever evolving role. We cannot really believe that what we know today as a CFO role will again remain tomorrow. That role can even become more powerful and more evolved in the future. So that's all from my side.
Yeah, absolutely. Very well summed up by the panelists. So a CFO is not confined to his or her room, looking or analyzing the spreadsheets, but has to move out of the room and be a guiding light in the organization, understanding all the process across the organization, getting the team together, implementing technology, and all those things are the additional responsibilities which already the CFOs have started taking it. So in this VUCA world, as Mr. Anuj said, so we need to have, definitely the CFOs are guiding the team towards a vision and clarity into what is the organization's objectives. So as we all heard, as I started in the beginning, I said Chief Financial Officer, So a CFO can also be termed as Chief Flexible Officer, Chief Futuristic Officer. And one of my colleagues last time also said, since you are taking up the responsibility of introducing technology in the organization, if something is there pending, you'll also be a Chief Followed Up Officer, right? So, of course, to sum it up, it's always a Chief Fantastic Officer. And thank you very much to the panelists and the audience here. Thank you.
Thank you, Ms. Hemlatha, for moderating this session so well. And thank you to all our panelists. Next, I would like to call upon stage Mr. Vikas Gupta at Axis Bank to do the honors. Can we have a big round of applause?